What's up, guys? In this video, I'm going to be going over everything you need to know about entries when playing internal or external range liquidity. We have gone over in the last video everything you need to know about those two concepts. So by now, you should be seeing them all over the place, understanding that it is truly the way the market moves, doing only two things: seeking liquidity and offering fair value. Just really try to keep it simple, and these charts will become super clear to you when approaching them. You don't need to have a million things. The less, the better. Focus on fair value gaps, focus on old swing highs and swing lows, and trust me, your whole world, your whole perspective lens on the market will change. So today we're going to go over entries, two different types: lower time frame entries, intraday trades, and swing entries, which is something that I personally have been doing recently and absolutely just loving it. So let's just begin right here. We have Aussie dollar. On a daily chart, we have context. What is the context? Daily IRL via this fair value gap right here, this imbalance, internal range liquidity, towards daily ERL, this daily swing low, external range liquidity, giving us that lower time frame boundary we can now go into to look for intraday trades down into this target. So we have our context, we have our drawn liquidity right here, bearish. What we also have going on for us is this old swing low right here, overlapping. So in this scenario, we're using the bodies because the bodies are the level that's overlapping with the fair value gap, whereas this actual swing low is not. So in that case, you're not going to use that, and you're just going to use these bodies right here, giving us that overlapping line of defense, these two overlapping PD arrays, which we want to see continued lower prices. So on a higher time frame basis, we have our daily context right here. Looks great. So now we can dive into the lower time frames, and from here we can go into the 1 hour chart using that time frame alignment I've previously discussed in prior videos. So let's just dive into that right now. So here we are on that 1 hour chart, and right here I am simply looking for a 1 hour fair value gap displacing lower, giving us that change in state of delivery, that institutional sponsorship signature, giving me the confirmation that we do want to continue moving lower towards this daily external range liquidity. So you can do a couple things here actually, and you can look either for that 1 hour fair value gap, or what I do a lot is go into the 15-minute chart and look for two 15-minute fair value gaps in the form of two high probability legs. And I'll show you what that means right now. Let's just dive into the 15-minute. So here we are on the 15-minute chart right here. And what exactly is a high probability leg, and why am I looking for two of them? Well, a high probability leg is a swing low to a swing high that contains a fair value gap in the middle. Meaning, here's your swing low, here's your swing high, and here is a fair value gap just within that range. Okay, that is a high probability leg because it has a fair value gap. If it did not, it is not a high probability price leg. Okay, so it's very important to understand that. So right here, let's identify our first high probability price leg, and let me just zoom back, go back in time to make this very clear. So right here we have our swing high, here is our fair value gap, and then right here we're going to create that swing low, giving us that first high probability price leg because we have a fair value gap right here, and then we also created a new one right there. So this isn't an area I'm looking to enter off of yet. I'm waiting for one more 15-minute fair value gap in that form of a 15-minute high probability leg lower. So we just wait for that, and it is created right here. So as you can see, typically what I want to see is it respect that 15-minute fair value gap and then push lower, creating that new leg. But we do have another scenario that can occur where we just sweep that last line of defense and then create a new 15-minute fair value gap lower. Meaning, what's the last line of defense in this current price leg? From this swing low to this swing high right here, that created that, let me zoom in, that created that high probability leg because of the formation of this 15-minute gap. The last line of defense would be this swing high right here. We could sweep that swing high. it is still a reason to continue moving lower should we not respect this 15-minute fair value gap, should we not respect this order block right here. We can always sweep the last line of defense and create a new leg lower, which is what we saw right here, giving us this next 15-minute high probability leg, because we have that swing high right here to swing low right here with a fair value gap in the middle. So there's your second leg lower. Here's your first one, here's your second one, and this right here is already a valid entry. You can take stop loss at this short-term high, entry in that fair value gap, and then you can target a very simple and very strict 2R right there. And then that would have been your London session trade right here. So let's see how that would have played out. It's not the one I took. I'm sleeping during that time. I took something else, which we'll see right now. So let's just move along in time. And right around here, we create another 15-minute high probability leg. Remember, just a swing high right here to a swing low right here. That has a 15-minute fair value gap, or any fair value gap, because this is fractal, so you can apply this to any time frame right there. So this is where I took my entry actually for shorts. Entry at the low of that fair value gap, stop loss at the swing high right here, and you simply target a 2R right there. Very simple, very easy. Yes, you can play the third high probability leg as well, as long as there is no 1 hour fair value gap above price that we need to come into. And if we go up one time frame, we don't see anything we need to retrace into. So as long as there's no fair value gap on the time frame above, you can continue to play these 15-minute order flow legs lower. Just have to make sure there's no 1 hour gap above being created that we might want to draw into. So this right here is where I took my entry, and eventually we just delivered right here in the AM session. And then we see yet another 15-minute high probability leg get created. Remember, swing high, swing low, with a fair value gap in the middle. So let me just confirm this swing low first. There it is. And now we have this gap. So this is where I took my second entry, 15-minute FVG, in this fourth 15-minute high probability leg. So took an entry right here. In this scenario, I actually used the overlapping line of defense. I used this order block. So I entered right here. Put my stop loss at the bodies just to save a little more RR right here, targeting this 2R. Again, the safest place would be to have it at the swing high, but this is an alternate stop loss placement that you can do, because I don't expect this to disrespect the gap, disrespect this order block, come all the way on top to the bodies. At that point, I already expect this high to get swept, so just saving a few pips right here. This is a valid stop loss, or just consider a more advanced stop loss. If you want to be really safe, again, yeah, just put it at that swing high, but I like to put it at the bodies a lot. So that's my trade right there. And then just playing those 15-minute order flow legs is what you can do. Remember, there's no 1 hour gap above us either right here. So there's no reason we should continue higher. And this gives that validation to that 15-minute order flow leg already. So you can just play those all the way down. Remember, just making sure the higher time frame above it is in agreement with that. So let's see what happens here. And then we hit that 2R right there. So that was my third trade that was my second trade on Aussie dollar right there. Just playing those 15-minute order flow legs down. Very simple. And again, there was news on the day. Always for intraday trades demanding that red folio news. And this was on a Thursday. Thursday we had 8:30 a.m. USD news right here. So perfect within the kill zone. That is how you want your intraday entries to be. They must be within a kill zone and with red roller news on the day, and just playing those order flow legs lower. So the same method we just applied here, where you can look for 2 high probability legs instead of just that 1 hour fair value gap, you can apply it to the weekly chart when you have weekly context as well. Same for the monthly. So for example, if we had a weekly fair value gap right here, we would look for that 4-hour fair value gap displacement. But if we don't see that, we could also just go into the lower time frames and look for 2 1-hour high probability legs, right? Same exact process we did here, just with those different time frame alignments. And same for the monthly. All right, so you can use that, and it is very nice. Really, you can play whichever one you see first. So if you see a 1-hour fair value gap first, that gives you context to then go into the 5-minute, for example, and look for entries there. But if you don't see any 1-hour gap, which we didn't see here displacing lower, and we just saw these 15-minute high probability legs, we can just play that already. So really just play whichever presents itself first. That is the way I approach it. So now let's go into some swing entries right here. So let's go over swing trade entries, which are my absolute favorite. Recently, I've been getting into that, and I have been loving the results. So a few things about that. What I really like about it is that you don't need to demand news on the day or be within a kill zone for your swing entries, which means you can literally just play the chart, and that makes things very easy, very simple, and very clear, really. If you see the 4-hour fair value gap, see that 1-hour fair value gap, and using the correct time frame alignments, of course, which again are in my previous videos I've mentioned, you can really just set your limits, stop loss, TP, and walk away, and literally it's that simple. So let's just dive into it right here on this Aussie dollar. We're on that same daily context, IRL to ERL, but now we have to go into the higher time frames, always checking what fair value gaps are being created. So right here, this is going into the Asia session, and we see this 4-hour fair value gap created right there. Now, the reason I don't expect price to come into this, it's a breakaway gap, meaning a breakaway gap is just a fair value gap that you don't expect to get filled prior to the drawn liquidity being hit, which is this level right here. So the reason this is a breakaway gap is because this third candle closed below the low of that second candle right here of this 3-candle fair value gap formation, right? First, second, third, we close below the second candle's low. So what do I do here when I see his 4-hour fair value gap? I don't just set a limit here because I don't believe we need to go into it. So what I would do is move one time frame lower to the 1 hour in this case, and look for a premium array or just a fair value gap I can frame a short out of, ultimately seeking lower prices. So let's go into the lower time frame right here. So here we are on the 4-hour chart, and remember, this is a 4-hour breakaway gap I don't expect to get traded into. Remember, I wanted to find a new premium array to seek lower prices from. We can see that right here. We have this 1-hour fair value gap overlapping with this old swing low. So this is looking very nice to frame a trade out of, and that's what I used to get into this short. So what I did is I set a limit order right here in that overlapping line of defense, overlapping swing low with fair value gap, and I set my stop loss at this swing high of this 1-hour high probability leg. Remember, swing high, swing low with a fair value gap in between, and targeted a strict 2R, which was very near the external range liquidity draw right there from the daily. So my stop loss is very safe up here, also taking into account that should we want to trade into the 4-hour breakaway gap and move lower off of that, I should still be safe, and I'm taking into account that possibility as well. So this looks great. That is where I set all my orders. Let's move along. And as you can see here, respected this level to the T, zero drawdown right there, and a huge volatile move right to my TP. The reason for that was there was actually some war news. Israel struck Iran with some missiles, and this caused this major sell-off in the market. So I did expect this to go into like an overnight hold, like a real swing trade, but kind of just turned into an intraday trade based on that news volatility. So I guess I got lucky there, but that is how I was able to milk this whole daily IRL to ERL context. At first, trading this intraday with the 15-minute order flow legs, and then coming into the Asia session looking for a swing off of those higher time frame PD arrays that were created on the 4-hour, on that 1 hour, and then just playing that towards the draw right here. So really, really great delivery on Aussie dollar last week. So here we are on our next example of a swing type of entry, always looking for that monthly, weekly, or daily context, looking for that IRL to ERL. Right here, we are on Euro JPY weekly chart. We see a weekly fair value gap overlapping with a weekly order block, always using the bodies in the case when it overlaps, not the wicks right here, since it is not overlapping. So that is the reason this level is marked. So we have our overlapping arrays, order block plus fair value gap, very strong level to see continued higher prices from towards this weekly external range liquidity. So now we have a boundary to go into the lower time frames and look for a move from discount array to premium array right here. So now let's dive into the 4-hour chart. So here we are on that 4-hour chart, and we can see price aggressively displacing right here with this 4-hour SIBI into our higher time frame PD array, our weekly gap and order block. So this is setting up really nicely because an aggressive displacement in is usually followed by an aggressive displacement out. This right here is going to trap a lot of short traders who are not aware of the higher time frames, and they're going to expect continued lower prices. We want to trap them. We want to see a large fair value gap now displace higher, giving us that sharp turn, giving us that change in state of delivery, giving us that bullish institutional sponsorship, whatever you want to call it and see it as. I am literally just looking for a 4-hour fair value gap right here, displacing higher, disrespecting this SIBI, just painting over it. So let's continue and see where that happens. So right here, we get our 4-hour fair value gap. I'm ready to long at this point. So we get another one right there. A new 4-hour fair value gap. So in this case, which one do you long? You have two right here. I always long the first one. It is that first line of defense. A move down into this one is never really guaranteed. Also, this is a breakaway gap just because the way this third candle closed above. So for that reason, this gap below should stay open. I'm expecting this one to get respected. So what I do is set your limit order right here in that first 4-hour gap, stop loss at this swing low. I use the bodies and then just target a strict 2R. Now, my actual entry was a bit different because I missed the original entry into this 4-hour gap. So what I did is I market bought around up here, and that's totally fine for you to do. Remember, as long as you can frame 2R within this overall context from this weekly IRL to ERL, it's a valid trade and it should still work in your favor. So I entered late, totally fine. Look how much room I still have up to that external range. And I just targeted 2R, entered very close to that 4-hour external range liquidity. You could even play this on the lower time frame, right? This is where you would get your lower time frame entries. Right here from this 4-hour IRL to ERL, you can look for 15-minute or 5-minute entries, like we discussed in other videos, how to get that. But this is a swing-based play, so not demanding news on the day, not demanding a kill zone, just entering, playing the chart, and targeting 2R within this weekly context we have here. So let's see how this played out. And it was a very beautiful, aggressive run up to TP. So excellent example right here. Beautiful delivery on Euro JPY. So here we are on our final example. We have GBP NZD. We have weekly context, weekly fair value gap to weekly external range liquidity, IRL to ERL. And we have an old overlapping swing high. Now, why do I use these overlapping old swing highs? Well, this right here is an area of fair value. All of this right here. Meaning, we had buy side offered, sell side was offered, and then buy side was offered again. Everyone had a fair chance to participate within this entire area, meaning the only place where we do not have fair value anymore is right above it. Right here, we have this fair value gap that has not been offered fair value yet. So that is the level I want to see hold, this old swing high overlapping with that gap. Okay, this should be respected for then continued higher prices towards this level. So we have our context established right here. We can now go into the lower time frames and look for that 4-hour fair value gap displacing higher. So here we are on the weekly chart, and we see this initial 4-hour fair value gap displacing higher right here. and it can be an entry on its own. It's not the one I took. I just don't like holding into the weekends and didn't expect this to move much going into, Thursday into Friday here. So I wanted to wait until next week and then look for a new fair value gap to be created higher. So we get that new 4-hour gap created right here. And this is where I looked for my entry. So what I did is I set a limit order right here in the open of that gap, stop loss at that swing low, and then targeted a strict 2R right there. So that right here, very simple. Not looking at kill zones, not looking at news, just playing the chart in front of you. It's very, very simple. Look for your context, dive into the time frame, using the correct time frame alignment, go into the 4-hour from a weekly, and then literally just enter on that gap. So let's see how this delivered, and beautiful delivery. There is your 2R. So I'm going to leave you guys with this quick cheat sheet here. Basically everything we went over today. For intraday entries, you're going to always demand context. This goes for any strategy really. You're going to demand context on the monthly, weekly, or daily chart. You're going to demand that PD array to frame your lower time frame entries out of that daily, that 1 hour, that 4-hour, or if you're looking for those two 15-minute high probability legs off a daily, that can also just serve as your PD array and entry in that scenario. And these entries, 15-minute and 5-minute, will come off of your 4-hour and 1-hour and daily arrays. You're going to demand high impact news on the day. You're going to want to trade within a kill zone, Asia session, London session, New York session, and target 2R. For your swing entries, again, context necessary monthly, weekly, daily. Your PD array will also be your entry. So entries on the 4-hour and 1-hour time frames. News and kill zones are not necessary, and you're going to target a strict 2R as well. So I hoped all of that helped. I'm doing both of these strategies at the same time. I'm doing my intraday trades as well as swing trades on a side account. So try both of these out, see which one fits your personality. You might be really good at intraday entries and might not have the patience for a swing system, or you might be awful at intraday entries. There's too many variables on the lower time frames and you prefer just swinging it, keeping it simple, and just playing the chart. Just find out what works for you, what you really like. And yeah, as always, keep it simple. Don't overcomplicate this stuff. Trading already is complicated as is. So when you just focus on fair value gaps and swing highs and swing lows, it just makes this so easy on your psychology, not having to worry about 50 different PD arrays. Less is more, guys. So if you have any further questions on this, join my free Discord below. I'm in there every single day answering questions. It is a community of like-minded individuals. We're all pretty much trading the same things, looking at IRL to ERL. It's a really helpful and great environment to be in if you're a new trader trying to understand how to read these markets. So I'm always in there dropping outlooks, watch lists, some tips and advice. Highly recommend it. So check it out below. Also, Apex is running an 80% discount until the end of April. So it's my #1 preferred prop firm. Go ahead and check them out. And as always, thanks guys so much for watching until the very end.